Unlike other cycles, like we've never had this amount of adoption. Like adoption's all-time high, prices are at 2-year lows or approaching 2-year lows. And that's what hurts the most here. Like in a scenario FTX, you're like, yeah, there's a lot of dumb shit that we did as an industry. Certain players that just it's warranted, but now it's harder to reconcile the adoption of the price action.
Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed.
Ladies and gentlemen, welcome to Empire. I was late. It seems like every 10 minutes, Bitcoin's going down by $1,000. Rob and I are not market oracles. Maybe Rob a bit more than I am, but we brought in Josh because Josh is here to tell us if Bitcoin's going to hit 60,000 by the end of the conversation, or if it's going to rebound at 100K by the end of the month.
That's right. And then, if it does, I might disappear forever. You might never see me again, but
there's a lot of that happening in this space. But Josh, for anyone that's been under a rock and doesn't know who you are, why don't you give us a quick background and then we level set the conversation?
Yeah, absolutely. Glad to be here. I am co-head of markets at FalconX. FalconX is a prime broker trading firm in crypto. We service a lot of hedge funds, institutional counterparties in the space. We do a lot of things from OTC trading of spot and derivatives. We're a swap dealer regulated by the CFTC, so we do a lot of options activity on crypto underliers. And then we also, facilitate direct market access to various exchanges, provide financing, all that kind of stuff.
So you basically, from your standpoint, you're seeing a lot of the flow, a lot of who's selling, who's buying, who's stepping in, who's leaving, all that stuff.
Yeah. It's a privileged position to be in, like this sort of centralized dealer seat. I think a lot of counterparties do rely on us for liquidity, for access, for market commentary, and, an aggregation of a synthesis really of like what's happening across the whole space. Like we get to kind of help distribute risk, right? That's sort of like the function of any dealer, is just like help concentrated positions get distributed to the market in the most efficient way possible without disrupting things. These days, there's forces bigger than us, right? There's just a lot of retail rotation away from crypto. There's all this sovereign flow and all that kind of stuff. I'm sure we'll get into it, but we try to stay, front and center for our counterparties.
Josh, how big is FalconX on a relative basis? Do you think you're the biggest dealer, the third biggest dealer? Like how big do you think you are relative to the space?
Yeah. I mean, look, like unfortunately, compared to traditional markets, crypto is like pretty opaque, right? There's no like public reporting on this type of stuff. I think we're generally considered top 3 at this point. We do get involved in all the major kind of derivative flows, at least on blocks, and there's channels on Telegram. You can search for them and you can kind of see like large blocks that are printing on chain between dealers and large funds. And so that's probably one good way to track and measure our market share, but we're usually in the mix there.
Awesome. Yeah. Well, maybe we should start to like, Josh, just give us the state of play. Like what is happening? I think Bitcoin is down 25% on the year. It's down another 7% today. Silver is down another 10% today. Gold's down 2%. NASDAQ's down 2%. We were just talking about this, but Blue Owl is down, I think 2 or 6% today, and is down significantly over the last couple of weeks. It seems like there's a lot of things that are both crypto specific and non-crypto specific that are flashing red lights. And so I'd love to hear, like, from your perspective, what's happening. Well, how much of it is crypto specific? How much of it is related to like October 10th? And then, how much is, maybe more macroeconomic or, other types of, extrinsic factors?
Sure. And, these are the types of kind of bombardments of negative news and catalysts that usually result in bottoms, right? We're seeing just a cascade of really, really bad things, from everything from like really notable people and market participants leaving the space. There's just general kind of negative sentiment around, technologies that have been built in crypto over many, many years. The Ethereum Roadmap, for instance, and like even questioning, the fundamental architecture of things like Bitcoin, right? Like with all of the questions with quantum computing and things like that. So on top of that, you have just a series of negative flows away from crypto. You've got retail that's generally packing their bags and leaving for greener pastures like equities and metals, and really chasing that really parabolic run that we had last week. At the same time, the sovereigns, right? You look at China just stacking, thousands of tons of gold, basically, right, in reserves. And then on top of that, you have Tether, which is really a crypto native institution, also buying a lot of gold, right, in favor of gold in favor of Bitcoin, right? So that's really what's driving the dynamics, and it's a combination of flows. It's a combination of these fundamental overhangs like the quantum question, and yeah, it's weighing the entire space. I think liquid managers that we trade with are positioned very defensively at the moment. There's really only a handful of names that can be held in these portfolios with any duration at the moment. Hype has been a notable outperformer. I think, you've discussed on your podcast many times with guests that there's this rotation to revenue, right? The revenue meta, tokens that can be sustained through buybacks or other means that revenue generating means. There's only a handful of names in crypto, and everyone's hiding out in those names. That's what we've observed. They're very concentrated, but at the same time, they have been actually performing relatively well relative to even the majors. So that's kind of what we're seeing. Everyone's kind of pointing to like high 50s as a point where they will dip their toes back in and start accumulating long positions. It's probably that probably means that we'll bottom ahead of that, but so maybe low 60s. Maybe this podcast will get there, but yeah.
For someone that's not in your seat of seeing all the flows, what are some of the indicators around like options or implied vol, or that you can say, like when we just said, okay, that the low to mid 50s or something that the market's kind of looking at, like for a retail guy, like what can you look at to understand that?
Well, yeah. I mean, crypto options are a reflection of just market demand for protection and the fear that's embedded in the market, right? So we've seen vol levels rise from historically low levels in the last 2 to 3 weeks, all the way up, let's call it like 10 points, 10, 15 points in front of the curve. So the front is implying something like mid 60s vol. And the back is still, let's say, in the mid 50s, but that's coming off like a very low level of, let's call it like 40 vol flat across the curve prior to a lot of these recent sell-offs. And the low level of implied vol prior, I think, is just a good indication of lack of retail interest. Low levels of vol, the basis spread between Bitcoin futures and the funding spreads on perps relative to spot price were all at very compressed levels, right? So that all indicates there's just not a lot of people still trading levered instruments in crypto. All of this is obviously on the back of what happened last year in Q4, where just a ton of leverage got blown out on Binance and Hyperliquid and many other levered venues. So we're still dealing with the fallout of that, I believe.
I mean, I started writing about like my just being very defensive in October and then November, and I've just been I don't feel like I'm getting paid enough to take this amount of risk on liquid side. But from your standpoint, like coming into the year, like was there anything positive that would have compelled you to put on more risk? What would have to change for you to really meaningfully like go out on the risk spectrum? Because you're seeing a lot of value destruction, not just in crypto. Like, silver is more volatile than a meme stock. SaaS is massively re-rating. Like markets just are very jittery right now and want to go down. Negative headlines carry more weight. Like, why take on more risk when you can sit and treasuries and just hide there for a while?
Yeah, well, I mean, not even just treasuries, right? Almost every other asset class has outperformed gold or Bitcoin in the last couple of weeks. I mean, if we just rewind towards the top of the year, like you'll remember some of the key talking points that people had for Bitcoin, right? One being, turn of the year, there'll be a alleviation of the redemption outflows of 2025, and there would be a new influx of capital subscriptions into funds. Now, I think some of the recent headlines that we've seen, like different liquid funds, spinning out or reconfiguring, I think that kind of like speaks to some of the challenges right now in the space in terms of fundraising and being able to kind of like deploy into these discretionary liquid strategies. So that point is sort of off the table. Another big point at the start of the year was this idea that, the DATs, which had been a big driver of flows in 2025, there would be a lot of pickup in activity from, either, MNAVs improving or some kind of like activity across these DATs, maybe M&A type activity or activism activity. I think that has been slow to play out so far this year, although, you can kind of see that a lot of smart thinkers are thinking about it. You saw the Matt Levine article this morning, hit the tape, just talking about the potentials for activism in the space. So there is capital looking at it, but it just hasn't materialized in a way that people kind of thought. Another area that people point to is just this stark divergence between Bitcoin and gold, and actually Bitcoin and global measures of liquidity, like central bank liquidity, right? That is obviously all benefiting and flowing into gold and not into Bitcoin. And just like we've said in the last couple of minutes, like it's really widened now and not really compressed. It's not played out the way a lot of fundamental macro guys are thinking with respect to Bitcoin. So
there's on that point, there's all these like now trying to conspiracy theories come out when prices don't do what you want them to do, right? Tom Lee's of the world says that this is a feature, not a bug. He's lost billions and billions of dollars for his investors. Believe me, bro, this thing is going to go up. Moon math, all this kind of garbage comes out. Novo comes out saying, hey, there's like suppression by the old guard that doesn't want to see Bitcoin, doesn't want to see crypto thrive because stable coins are hugely going to eat into their interest income. And so there's all these kind of weird things that no one can quantify that are suppressing prices. There's also like the more kind of probably cynical view here, which is, dude, crypto continues to be a very like farther out on the risk spectrum. When people feel pain in their portfolio, the marginal buyer is not there. So just assume that there's a shit ton of vol, ride it out for 10 years. Anyone that's ridden this shit out for 10 years usually comes out ahead. And don't make it 100% of your book. Like, as much as Rob is, an investor in the space, he personally has that stuff outside of crypto, and that allows you to be a better investor. But anyways.
I invest only in Dragonfly funds. So that's it. The only thing I invest in.
Insert clip of, I bought ETFs last week. No, John, I mean, like, is there like all these, what's your take on all this? Like, and give us some... Yeah.
And Josh, I'd like to understand one thing from your perspective too, is like we're talking, like you're talking about a lot of like very, I think like, like trading specific, like, quantitative type measures, right? But like, if I just like zoom out for a sec, right? Like, Evgeny puts out, who's the founder of Wintermute, puts out a post yesterday that, he essentially says that, talking about like economic activity on chain is pointless because it's not really big enough for it to matter to anybody. He's like, he doesn't think stable coins matter because like, again, it's like really small relative to what's happening in the broader market. I think he's being pretty unfair there, but like, he
10 trillion of stable coins. That's more than Visa and MasterCard combined. Like, that's not nothing.
Yeah, he's being pretty unfair, I think, on the stablecoin side. He talks about how like CME doesn't matter. He thinks Bitcoin has lost, any reason to exist other than number go up. So he comes out with this like extraordinarily bearish post about like this. He's like, he thinks that the market and like the space is in a good position for like, adoption of certain things, but also he's just like extremely bearish on like all things token prices. Yeah. And, there's been a lot of discussion around that. And there's been a lot of discussion also around like, just like microstructure, like did 1010 and like the blowout of leverage just like completely screw the microstructure. And that's the problem. And so like, how do you think about it from like, what is like structurally, fundamentally, that's something wrong that's happening here? Or it's just, to Santi's point, like it's high risk, and it's a more volatile industry, and like where the whole market is kind of showing signs of weakness during this kind of volatile period.
Yeah, look, I mean, this happens every cycle. Like, I think people are doomsayers at the lows always. And yeah, of course, he's right on many points. Like, our industry is still relatively small compared to the broader world of traditional finance and payments and all that kind of stuff. But yeah, that's not to say we should be dismissive of it, right? Like, I mean, just Rob, like you and I have followed some of these trends in the last couple of years that have become like huge world-changing phenomena, like everything from prediction markets, which were broadly dismissed by the general public, 5-6 years ago as being completely irrelevant and like with no volumes, and now just being plastered on every CNBC and CNN screen,
and grocery store.
And grocery stores, everything.
A lot of crypto bros are going to be walking into that grocery store.
Yeah.
Got liquidated.
Look, I mean, we've all been in space long enough. Like we remember, like I remember, talking to like Arthur back in the day when he was trying to pitch BitMEX and perpetual swaps as a tradable instrument in crypto, and everyone like was extremely skeptical. I was like, well, there's a liquid spot market. Why do we need this thing? And I mean, everything just takes years and years and decades really to play out. And we've all seen it happen many times in crypto. And by the way, like I do think that all of this stuff will be an overhang in the short term, but as soon as price leads narrative, right? We all believe that in crypto, and crypto is the most reflexive asset in the world. Like once price starts to turn, like all these things will pick up again, and then we'll all be believers again, right? In the tech. So
yeah, it's funny because we didn't talk about this at the beginning, but you joined FalconX through an acquisition of your prior company called Arbelos, which Dragonfly and myself led the investment into, and I sat on the board of your company. Yeah. And I remember you and I had lunch. It was January of 23, I think, and like a taco stand or something. And it was like right after FTX happened, and we looked at each other and we were like, "Is this space like cooked?" And we were like, no, we believe that the space is still, it has a reason to exist. Like we think that there's a lot of secular tailwinds here. We think that the technology is going to be used for tokenization and stablecoins. We talked about all this stuff back then. And you're like, I want to start a business that just is a better institutional, transparent dealer than what we saw with FTX and otherwise. And that kind of played out, and now it feels like we're having this like same exact discussion again, like exactly. 4 years later, 3 years later, because of how volatile the space is. So I do, to your point, like for those of us who have been here a long time, it does seem a little bit like deja vu. It just happens with like Bitcoin being at a higher price.
Yeah. The thing that I feel like is going to be more painful is that you're seeing adoption, right? I mean, you have 10 trillion of stablecoins settling in January. I mean, that's on real utility. You're seeing a lot of enterprises, we've talked about it at length here. So unlike other cycles, like we've never had this amount of adoption. Like adoption's all-time high. Prices are at 2-year lows or approaching 2-year lows. And that's what hurts the most here. Like in a scenario of FTX, you're like, yeah, there's a lot of dumb shit that we did as an industry, certain players that just, it's warranted, but now it's harder to reconcile the adoption of the price action. Josh, I wanted to ask you, I was thinking about this yesterday and even today, like Google posted like record earnings and it's down 6%, entire SaaS. Like in a prior life, I was a SaaS analyst, and like just looking at that just makes me wonder about like, how do markets react to new information? Like software as a service being totally repriced because of the AI risk, right? You're taking uncertainty. If you thought a business was going to compound at 10% a year, you feel like you can, that business is durable. AI comes along and no one really still has priced how much does this change the game for software as a service. And by the way, Workday is not the same as HubSpot, but the market in this moment where the quant reads a headline, SaaS disrupted by AI, runs through it in their model, adjusts the growth, and then says, oh shit, trim risk. And because it has really tight parameters. And I think a lot of it, the market's in index, like it's just passive. So you have these like violent movements in the market. I feel like the market is just becoming more violent. It's more connected, but it's more violent. And it's at this moment, like in SaaS, for instance, the market's still trying to work through like what is the implications of AI. And by the way, that might take a couple of quarters. And I think where the most amount of money is made is when you have a strong view of like, look, Snowflake and ServiceNow are not going to go away. The market's like treating it like trash. It's not. I'm going to step in and buy. Translating into crypto, like, what are the catalysts? Like, are there particular catalysts that you've seen, or people that are really smart in understanding when stuff like this happens, they just really step in? Bitcoin whales, like there's an address on Twitter that just tracks Bitcoin whales, right? And they're like, oh, Bitcoin whales, like old time Bitcoiners are stepping in to buy. What is it in crypto market structure that you say, okay, that's a really smart buyer? Like they and what are those guys doing right now?
Yeah, I mean, I think the smartest buyers in crypto are the crypto native players with the deepest balance sheets, right? Like, and a lot of those are players that have been in the space from the very beginning and, maybe did token sales or whatever. They accumulated huge cash balances and they pick very selective points in price action to like start accumulating again, right? I mean, I think one name we can all agree is like relatively smart money is like Tether, right? We kind of follow like what they do and how they're thinking about crypto markets. And they have a lot of assets to deploy into the space. And I think they've, I think more recently they've sort of thought about maybe diversifying their holdings across to RWA. But those are some of the players. Like, I mean, there's others in the space, like the Block Ones, like those types of players who've been in the space forever and kind of seen multiple cycles. But yeah, it's those folks with like billions of capital to deploy and aren't afraid to kind of like take swings on liquid.
When you say liquid, is it historically, well, to what degree is it now just concentrated in Bitcoin? Because I think the marginal buyer for Bitcoin is stronger, but the marginal buyer for anything else other than Bitcoin is weaker.
Yeah,
because it's retail or momentum shifted to AI, and like other instruments, maybe DAT or crypto, like crypto equities. Just trying to think about like where the marginal buyer is today, where it would have been in prior cycles that would come on chain is no longer coming on chain.
Yeah.
Or is that just an over extrapolation and like the buyer eventually comes on chain?
Yeah, no. I mean, I was actually thinking about what your thesis around software names, and I actually think that the story here is does the availability of substitutes of substitute assets outstrip the growth in capital and liquidity, right? We can all agree there's a lot more money sloshing around because of expansion of balance sheets, central bank balance sheets, and fiscal and monetary policy across the board. I would say, does that outstrip the availability of substitutes? And when you talk about software names, what that really means is like, is AI increasing the ability of companies to replace and substitute vendors with something they build with Claude, right, or something like that, right? For crypto, what it means is like there's like a million new meme coins that launch a year, right? And everyone is there's let's say 20 new major token launches that are sucking capital out from their competitive set every year. And the question is that dilution? And then let's not even forget the DATs, right? The DATs, like the hundreds of DATs that launched last year as sort of like substitutes for deploying into the token markets themselves. So now there's this mass dilution of investor attention across so many different things. And then you have macro phenomena like gold ripping and silver ripping. You have, very compelling narratives in equities like rare earths and, quantum and AI, what have you, all of these sort of major themes happening that are really going to change the way global power is distributed. And all of that's just sucking attention away from crypto. So there's only going to be a handful of things that can really retain investor mindshare. And so to your point, like Bitcoin has to be the one that wins in that category, right? It has the longevity and the ubiquity. I mean, anyone in the world can trade it now. It's accessible through every investing platform, through every sort of like mode and medium. And then the remaining questions are like, what is the set beyond that can really like also have some durability through the next cycle? And it's probably things like hype with revenue. It's maybe things like ETH and Solana that have had branding and awareness around them built up over many years of market dollars and all that kind of stuff. So yeah, I think that's, but you're right. It's not going to, like, altcoins are fundamentally broken. We all agree on that. And
there's nuance there, but like I do agree. Like Evgeny's observation is something. The reason why I started Inversion, like we just don't have durable demand for anything other than speculation, and so I want to brute force that by acquiring stuff and integrating the tech. But like you could also argue like, hey, how do I go long the stablecoin thesis? Rob, you think about that every day, right? I mean, you're seeing a ton of stablecoin interest and growth, and on the private market side, like pretty interesting startups getting funded, like Rain and stuff like that. So
Coinbase crypto-backed loans powered by Morpho empower users to borrow up to $5 million using Bitcoin or $1 million using ETH as collateral. Loans originate in seconds with no additional credit checks and competitive rates, typically between 4 to 8%. Use USDC for down payments, debt refinancing, unexpected bills, and more. Repayment anytime with no fixed deadlines. Over $1 billion in loans have been opened through Coinbase to date. With the Coinbase app, you can manage crypto-backed loans with ease. To learn more, click the link in the show notes. As always, investments in blockchain technology involve risk, terms, and conditions apply.
I mean, I think there is, like, to the question you asked earlier, is there dilution happening? I think there's no doubt about that. I mean, Josh just kind of said that. Right, but there was this there was this Jason Choi tweet yesterday that was like showing like developer activity in like AI versus crypto, and basically crypto developer activity kind of peaked right before FTX, and has basically been kind of like down since we had a little bit of blips or whatever. And AI developer activity has basically been straight up and to the right, and they actually crossed. The more people were committing code in AI applications and more than crypto, starting around that period of time when FTX went under. And like, I look at that from like a venture capital perspective, and like, it's very clear to me now that the marginal person at Stanford does not care. The marginal kid at Stanford does not care about crypto anymore. The marginal kid at Stanford, he cares about AI, right? The marginal developer cares about AI. I mean, we've had a number of like, high profile defections out of crypto. I mean, there was, I believe just yesterday, Nader, who was at, I believe he was at, where's he at before that? He was head of growth at one of the big ETH protocols.
Celestia?
No. He was at, he was at Eigen, I believe, right before this.
Yeah.
And and he just left for Cognition, right? And this is somebody who has basically put his entire life into crypto for like a decade, right? And we're seeing like a lot of that happening. So there's dilution there, and then there's dilution on the public markets because all of a sudden you look at what's happening with like Trade XYZ on hype, right? And that one day silver did a third of Bitcoin's volume, all of Trade.xyz and the HIP3 markets did a third of all of Hyperliquid volume in a single day. Like there's more people who have capital on chain trading commodities and that's where like retail interest is right now, because like people have been excited about these other reflexive assets. Like the reality is like these retail investors sort of don't care what the asset is. They care about the reflexivity, right? And they care about leverage. And so like if the reflexivity and the leverage is able to be had in commodities, like they won't trade the meme coins, right? Like they'll trade what they think they can get, where they can get that. And so I think it's both the retail bid, it's happening at the private markets. I think we should talk a little bit about, there's a couple posts around like basically the death of crypto VC. We should talk about that a little bit. And then there's just, now the institutional interest is, okay, well, buy and hold Bitcoin ETF, but it's, now maybe it's Solana, maybe it's ETH, like to Josh's point. But like, you look at you look at a lot of these other altcoins, and like there's, even if they have ETFs, even if they have DATs, there's not really like an institutional bid at the moment because it's not clear what that story is. And I think it's even happening. And I want to make one last point, which is like, I was on a board meeting this morning with one of our portfolio companies, and they were actually asking me around like, should we still launch a token, right? And this is a company that they're in the stablecoin space. They're actively have a revenue. They're doing hundreds of millions of dollars of monthly volume. But the story was always around being more of a protocol and having decentralizing and having a token. And they're looking at me and they're saying, we don't know if that is the right move anymore for us to go like raise new venture capital. Like, should we, like, who is the right, capital partner for us in the future? Like, should we even have a token? Is that actually bad for us? Right. And I think there's a really clear story or clear reason why people think that. And we have to get some sort of regulatory clarity act type market structure bill passed that says, hey, a token can have some sort of, equity type, or like at least can accrue value type of structure for we to get like a mass, like institutional type bid in a bunch of these altcoins. And I think that's kind of what's overhanging all of this.
Well, I definitely agree on the clarity on regulatory stuff. Josh, I think you mentioned, I think the market's not dumb around like, let's talk about like deep inferences. We're talking about like, with EV3 guys and Sal, there's a whole overhang of tokens that just have codified their tokenomics, and those projects are not going to necessarily catch a bid if you have a new project launching with like a cleaner slate of tokenomics. And so if you kind of look through that, you say, well, gosh, like, you definitely don't want to be exposed to legacy tokens that just have broken tokenomics and need to restructure it on chain. And maybe it's not going to be as easy and needs to pivot and stuff. There's a couple of things that you mentioned, Rob, that I think be worth just double clicking on. The developer interest and deflections, like it's a little bit like LP, like fundraising, right? People want to give you money when you shouldn't be investing, and they don't want to give you money when you should be investing. We've talked about like fundraising is always extremely hard. It's only getting harder across asset classes. Josh, maybe from your standpoint, like, are you seeing new signups on the desk, like new institutions come in and be like, hey, where'd that guy come from? They never traded crypto. They're coming in. Because oftentimes, like, a working theory that we've had here as a group is there's now new smart money coming in. On the private markets, you have fintech investors like participate in rounds like Rain and others that we haven't seen since pre-FTX. So clearly interest in getting behind the stablecoin super cycle. But on the liquid side, just from your standpoint, not the fast money, because that's, I think, were just hedge funds like, arbing away. And even the Bitco book was like very much hedge funds, like just kind of momentum driven. But are there characters that you haven't seen in a while show up that you'd be like, huh, that's interesting. That's a very strong signal of people stepping in, not the Tethers of the world that have always kind of stepped in and are smart money, but like just new players that you haven't seen. Like, have you seen any new player in the last 6 months that is interesting?
Yeah. We have. It's not a complete wasteland over here. So I would say this.
That's not what I was suggesting.
I would say this is maybe a little surprising. Like the category where we're having the most constructive conversations and where we think there's actually a real path to growth in the business is in the banking sector. So, but this is, you have to understand, right? This is like after 4 or 5 years of conversations with major, GSIBs that are now starting to move in a meaningful way towards setting up custody, like setting up like trading lines with firms like us. They want to start expanding the product set beyond, just trading cash settled derivatives or CME futures. They really want to do meaningful things like putting it into their private bank portfolios and, distributing it through wirehouses and RIAs and stuff like that. And I think all that took a very long time because obviously we've only had ETF approval for a year and a half, right? And that was always on people's minds. It's going to take it's a sequential path to getting this stuff into people's portfolios, and now we're on that path. Like we're basically getting to the point where product sets are getting more complex. The choice and variety of things is becoming more interesting. And because the risk profile of the asset class has changed too, right? It's now no longer this sort of like, I only want upside linear, it's got upside convexity, all that kind of stuff. Now Bitcoin is like, okay, well, it has had some upside convexity. It's also come in quite a bit. It's now range bound. Maybe I want to get yield on this product. Like BlackRock just announced this sort of yield ETF on Bitcoin where they're going to sell options on IBIT, which is their own linear product. So the variety of things is picking up enormously. Now, if you're talking about just like smart money in crypto, what are they doing? I don't think it's come in yet where they have started to pick the bottom and accumulate Bitcoin again. In fact, I think it's a little bit still a defensive trading posture for most of them. Like we've actually seen quite a pickup across the board of liquid funds trying to do spread trades. So that would be things like, long Bitcoin, short an alt basket.
Right.
That has worked really well. Actually, in Q4 of last year, obviously worked very well. Now it's starting to level off that trade, but it's still something that people are thinking about. They're being conscious about asset selection and really picking what they think will be winners and being short other things against them. Now the other thing I would say, this is like a natural evolution of 1010. If you think about it, this migration towards like more regulated players, more exchange setups that are not auto liquidating, right? So like that was the crux of what happened. Was there's just embedded in crypto this sort of weird thing that doesn't exist in any asset class, which is like a major operational risk, which is that if you have a flash crash, if you have an Oracle update that's a really bad print, you could get liquidated on your entire position without any recourse and without even the ability to step in and meet a margin call, even if you have ample funds available somewhere else, right?
Yeah.
So, that risk is being mitigated across the board. And I think that's in migration towards like dealers. So maybe that's kind of why you have a pickup in interest with banks and stuff like that. It's also a migration towards more transparent platforms. That could mean a CME, right? Or it could mean like, or it could also mean like hyperliquid, right? Which is like arguably more transparent. Yeah.
I think there's always been a convenience premium in the space. In Grayscale, you could argue, there's a whole slew of players that said, I don't want to take the technology custody risk. Can't do it, but I'll buy it, and there's a massive premium. And then that got figured out to some extent, and with the ETFs. But I think they're still in a state, whether because Rob, as you're saying, the regulatory piece or some other thing, like there's players that are just going to continue to benefit from the convenience factor. One of the things that Rob, you said earlier that I think is just worth also double clicking on is there's a pocket of crypto that has been, crypto's been in a tough spot before, since 1010. I don't know how much, Josh, you have insights into theories of 1010, and there's a lot of interesting posts coming out of that, trying to do a postmortem. But Vitalik had a pretty interesting tweet on L2s that was kind of something that people kind of well understood and people kind of were talking about, of this broken value accrual. L2 tokens haven't performed that well. Have you seen anything interesting percolate over the last 24, 48 hours around L2 tokens, or just in general that, is there an irrational player out there that is bidding L2 tokens? Maybe an A16Z out there who just wants to defend the position?
Did you hear anything about L2s after Vitalik put out this post?
Did I what? Sorry? Oh, for Josh.
Yeah.
Yeah, so there hasn't. We just haven't seen it translate into major flows in such a short period of time. But yeah, we're obviously following that very closely. It's shocking just to see like what a U-turn in thinking there from the leadership. But and it's also it's like one of these things. It's like price leading narrative, right? If you've got this type of price action on ETH and on L2 tokens, it's inevitable.
Josh, when is the last time you saw real buyer interest come across your desk and one of the major L2s in
Uh,
SaaS?
Never.
No, he's definitely seen it before.
There's some. It's not. Look, it's not just L2. Like, I don't want to single anything out, right? But it's just like there's not a lot of interest in going beyond, like, let's say the top 5 tokens. Really, just across the board.
But let me ask you a specific question on that, right? So there's
Rob, may I remind you that you have L2 exposure, and for the sake of my bags, your bags, and the state of the industry, no more questions of this nature.
No. I have exposure to everything. Number one. No, but I guess the question for me is a little bit more around, like, I guess, is there something I can pick out of this, right? So yeah, so you don't have there's no interest in the L2s. Okay, well, I think Vitalik basically said, like, the L2 should go and become L1s, like, in some sense. I mean, he didn't quite say that, but like, I kind of said that, right? And like, I think there is some story here around, like, he even talked about the app chains and how he actually, like, it kind of likes the app chains, right? And that's like something that I think people for a long time have been very against in a lot of ways. Like, oh, we have to be decentralized and we have to be not opinionated. And I've long said that being opinionated as a chain is actually a very good thing, right? Because to now compete, you have to be able to build an actual business on top. And we've talked about this a bunch, Santi, but like, Solana runs like a business, right? Like their BD team, like their executive team, they run like a business. Ethereum doesn't have that, right? Because it's a very different type of organization.
You mean Tom Lee is not the chief marketing officer?
No, Mr. Beast is the chief marketing officer. So number one.
Not a bad.
No, but then there's also, so there's that story, right? But then there's also like the story of, like, okay, well, like, Athena did $350 million of revenue last year, right? And now it's trading at $2 billion FDV. The token hasn't performed well. We're the largest investors in Athena. I love Guy. I think it's a great project. And now I look at that and I'm kind of like, well, now it's actually kind of trading at like a SaaS multiple, right? And like, is it that, hey, there's no interest in these things at all? Is there's no interest in these things at the multiple? Like, is there an idea that, like, okay, well, things with revenue will do well over time, but they need to re-rate? Like, I'm just trying to figure out a little bit if it's just like, hey, like, people are just like closing their eyes off, other than, I guess, Hyperliquid, because of how much trading volume it's doing to the whole space. And it's just like, okay, well, I look at CoinGecko and there's like, here's the top 10 and like I pick those things. Or if there's like, people are actually like going down and like picking names that are like, these are actually things that deserve to catch a bid and that we want to be long-term invested in.
Well, they will. I think those investors will come back, the fundamental guys in liquid token space, but this isn't the part to be doing that.
Well, that's something interesting you said there. This isn't the part of the cycle to be doing that. There's a lot embedded in that statement, I guess. But I think the markets are not dumb. I would say, I got a lot of heat for just coming out with like price to PE ratios and price to revenue ratios and comparing that against SaaS stocks. Look, no valuation metrics like perfect. It helps you diagnose like certain inefficiencies in the market, saying, hey, why is a free cash flow yield on SaaS like 4 and Amex 7, and how do you make sense of that, and what's the growth? And it's just a useful comparison. I will say, like, there's certain apps like the L1 is in my mind just cooked. Like it's a way overvalued. Like and you can't justify the fees, and you're just paying like for it's a very lofty multiple. And the value accrual is broken, but the market still doesn't care, right? I mean, like Ripple is an example. You're just probably the smartest of the L1s because it just has never showed revenue, so just keep it like that and just keep selling the dream. But one of the interesting things is, like, if the market's not dumb, and I don't think it is, like, should we see, if you think about a pair trade, like if you want to go long middleware or long DeFi, short L1s. Because like most of the revenue is actually being produced at like an Athena, some Deepin protocols, some DeFi projects, Hyperliquids of the world. Like that's where like the real activity is, and they have stronger connectivity with the user. But like other than Hyperliquid, it's like been nowhere. DeFi since I left Parify has just basically been down only relative to ETH, with some notable like rare exceptions. Is that just the generational setup that in 5 years' time you're going to get paid handsomely, or is the market just saying, wait a minute here, I get it, but not all revenue is created equal, and this revenue is subject to speculative flows, and speculative flows are just not going to come. To Evgeny's point, it's just like the momentum is elsewhere. It's in AI, and I don't see it shifting anytime soon. So at least the L1s have brand and mimetic power, and just, people like the convenience factor is easier. You can buy L1s, you can buy Ripple pretty much everywhere, and not everyone can buy GeoNet or Helium or HiveMap, or like, putting aside just the tokenomic piece.
My view is, there will be a sharp dichotomy between tokens that have real ties to revenue and that mechanisms to create, positive price action from that. I would say like buybacks or whatever else you have, or even just staking yield, right? Something that passes value back to holders. I don't think and Rob hates this analogy when I use it. It's just like I do think that this is kind of like an NFT moment for altcoins generally, right? Because like most alts are really just like some kind of NFT. I mean, it's really like a fractionalized NFT of some idea. It's like an idea is like, okay, we need this high throughput chain, right? We need something, or we need like this privacy enabled perpdex or something, right? It's just an idea. All right, I like this idea. I want to own a piece of this idea. But unless it really generates revenue and it funnels that revenue back to the token, it's broken fundamentally. And like, I don't know if NFTs will ever come back. So then why would any of these like fractionalized NFTs, which are called altcoins, come back? That I don't know. That's kind of my
Josh hates venture capital. That's what I'm hearing right now. He's decided venture capital is a bad business. And Josh, and just so we're all clear, Josh, you two might be the two most active angel investors, maybe with like one other person that we know, in crypto history. Okay, so like,
Josh, how many investments have you made?
I don't. I'll say this past few years, not many at all, really. Very
was Inversion one of your last?
Yeah, it was one of the last.
There you go.
Yeah.
Well, what I tell people, Rob, is like, yeah, I made certainly a lot of like number of investments. That doesn't mean like number and ROI, two very different things, ladies and gentlemen. Active can be good, but doesn't mean much if you don't produce. Josh,
maybe on that point, should we talk about like what is actually probably the biggest news in the space this week, which is Kyle Samani leaving Multicoin?
Oh,
yeah. I don't know. I mean, Santi, you've known Kyle for a long time. I don't know if you have a perspective on it.
Well, yeah. Look, I tweeted about this yesterday. I saw the announcement. So I first reached out to Kyle, I think it was late 2017, early 2018. I'm a competitive type, and I saw him getting into a deal, and I was like, who is this guy? Like, why get in first? And I was like trying to understand who this was. So I go to his site and I start reading his research, and I learned a lot from it. I was like, okay, this guy is like, his clear thinking, like anyone that can write well, I think is just a signal of first rate intelligence, and he's very bold. And I remember having the first conversation. I'm like, I don't know if I love or hate this guy, but he's clearly thinking differently and making me think in ways that I hadn't think before. And back then there was a lot of like what seems obvious now, like, there was a lot of gospel in the space, but not a lot of like actual first principle thinking. And Kyle's always done that, right? There's a couple of key lines that Kyle always says. It's like, reasoning by analogy is like very flawed, and I think it was one of an early LP, at least in 2018. And it's interesting because for a while there, I was like, I really questioned the thesis because it underperformed. It underperformed relative to other funds. I was an investor in some other funds too. And, at the time I started Parafine, I'm like, you know what? Like, I'm not seeing it. So sort of like contrarian for the sake of being contrarian doesn't mean anything if you can't put numbers on the board. And then boom, he had done an investment in Solana, and I think like ultimately I hedge my investing career by investing in Multicoin. So he's at some point, this guy has a higher probability of catching something that I don't. And he's probably going to see something and has very different views than I do. So it's worth kind of investing. And it paid out big. That's probably one of the smartest things I ever did. And so, I mean, him and Tushar work very well. I think they have very different ways of thinking. I think Tushar is going to continue to run or he's not stepping down. He's going to continue at the helm. So I have immense respect for them. And I think they took it. If you're now that I'm building Inversion, like having a partner that I've seen them interact with portfolio companies, the constant feedback that I get from founders is like, not to make this a Multicoin show, but it's like these guys stand behind and they will just be unwavering support. And that matters a lot. Right. So I don't know what he's going to do next, but I mean, incredible run. They were early in Solana, double down, stuck to it, not afraid to voice his opinions by any stretch. And it's like, I think it's like one of those rare qualities that you need to have, I think, in investing, which is especially in crypto, which is very vocal and stuff, is like, you don't necessarily care to be liked and you're just in the pursuit of like the game. And like I think he embodies that. But yeah, I haven't reached out to him. I don't know what he's going to do next. I think he's going to stay as the chairman of Forward Industries, which is a Solana. Forward Industries. I know he's been curious on other technology spaces, like, he's a techno curious person. Though he's invested in like biotech, like that Mammoth, like DNA company, health. Last time I caught up with him, he was like training for like a triathlon or something. So anyways, I don't know what he'll do next. I don't know if this is him throwing in the towel saying, look, I've had a great run. Multicoin maybe has grown to a point where he can't produce the same returns. A lot of good investors have like started their own family offices and just transitioned to a different structure. I could see that. I could see him going to AI or sail into the horizon, build a family or something.
Great. He's going to go to AI too, right? We're talking about everybody at AI, even Kyle Samani. So I think there is.
Yeah.
Go ahead.
No, I was going to say, like, do you? I don't know if you've spoken to him, but maybe.
Not since I haven't spoken to him since he announced. Kyle and I probably speak, I don't know, once a quarter or something. I have a ton of respect for him. I think he's, to your point, like very curious. I think the point that you said, which is that like he's always been unafraid to be wrong, right? Or just believed he was right in the face of everyone else thinking he was wrong, which is something that I always respected a lot. I think they were probably the one other investor in the space that we felt like we're very comfortable being contrarian. And I think he was probably the only investor I would say is more comfortable being contrarian than us, at least in my mind. Right. And that Solana investment and trade is probably the single best venture investment, of maybe one of the single best venture investments of all time. And so great run for him. I do think it was interesting. There was this, I actually didn't see it, but then I saw tweets about it, that there was, a tweet that he had put out that then he got deleted. That was basically like crypto is just not that interesting to him anymore, or hasn't been that interesting to him in a while, and blockchains are ledgers. But, it had me thinking again about just the thing we were talking about earlier, which is that there seems to be a lot of high profile defects. There seems to be a lot of, early true believers who don't seem to be believers anymore. I think, there was another post yesterday that from like a well-known kind of anon about like the death of crypto VC. And it just strikes me that we're in this period where even relative to like post FTX, more people than ever seem to be losing like their conviction. At a time. Yeah, but at a time
the adoption's working, price not going up.
Yeah, but at a time when like, there's an investor that I can't name, but who is in a deal that we a Series C that we just led, who literally has not done a deal in crypto since 2021. Iconic led Rain's deal, right? Like there is more appreciation for what we do in this technology in Washington, at the regulators, in Silicon Valley than there has been in years. And yet, maybe ever, right? And yet all of these crypto people, and a lot of them have become rich, and so maybe it's just like, they want to do other things, or seem to be losing faith in a way that they had in a long time. For myself, as someone who's been here a while but hasn't been here as long as either of you guys or Kyle was, it's very interesting thing to see, especially as I see these people as also competitors, and my competitors seem to be kind of you know,
Yeah.
moving in different directions.
Well, this goes back to there's two, like, I love sport analogies. Kyle, I'm gonna have to make an analogy if you're listening.
Yeah, I never
Kobe,
agreed with him on that. Like analogies
no,
can
I
often
don't.
be
Like,
good.
by the way, because people understand it through analogies, right? So, but Kobe Bryant said something that it rings true, right? Which is when he joined the NBA, he said he understood that he was going to win championships because he said most of my other peers were checking out. They had signed multi-year contracts and they're in cruise control. They didn't care, you know. They hedge. They're set for life, or maybe not because they spent a ton. And he was like, I did the opposite. I worked harder. I showed up at the gym twice a day. I'd stay true to discipline because I love the game. And I'm not doing it. In fact, when you remove the obstacle of, I don't need to do this to put food on the table, and I fix that part of my livelihood, I can play the game in its purest form, and you never retire. I mean, I've seen so many of my friends in crypto since the early days that thought that all they wanted was just to make their number and then just say, that's it, man, I did it. And then they check out for a bit and then they want to come back. And I always tell them it's almost like when you're in middle school and high school, you feel like you can't wait for summer break. 2 weeks in, you can't wait to go back to school because you miss your friends. But it's hard to get back in the game and you lose relevance. You sometimes lose your mind around this process. But other people have done it really well. Like, you know, they just develop an interest in photography, just bird watching or whatever. There's another post about Djokovic, who he came to a point, like tennis, I think, is like a very psychological sport. And I think at one point he was like, I hate this game. And his coach like reminded him of the early days of him in his childhood, of like why he picked up a racket. And every time he plays a game, he now goes back to that childhood memory of like loving to hold a racket. And he developed a love for the sport. All this to say is like crypto investing is extremely hard. And anyone says it's easy, it's like, dude, it has so many other layers of complexity, like liquid venture. Just think about that for a minute. It's incredibly complex. And how do you value that, and the cost and the security risks? And so I got to hand it, like someone like Kyle probably is like, listen, like, you know, am I getting paid enough to do this, or can I just do it with my own book? I'm still going to invest in crypto, and, you know, but I just want to do it through my own capital base and pursue other interests. And I could see that happening, and I respect that. But Josh, as someone that has been around the space for long, you've been successful. Like, what keeps you in the game?
Wait, and when was your first crypto job? 2016?
14.
2014.
I worked
Wow.
at school back in the day. Yeah. Well, yeah, first I did want to say a few words on Kyle and Tushar. Like, I mean, they're two investors in crypto I respect enormously. I think a lot of people don't know, but I mean, those two guys, both like my career and a lot of people who have worked in the trading industry in crypto, like a lot of us owe our longevity in the space due to them, you know, both because they are, you know, one of the largest active counterparties in the space, but also because they are extremely generous with their time and, you know, sharing ideas and theses. And they're always like really committed, like Rob said, to the space. I remember in, you know, post FTX, like in 22, I mean, I think that their venture fund was maybe one of the very few funds in the space that were willing to take bets on Solana entrepreneurs, right? Like with Cheeto and a couple other deals in that era. And that paid dividends for them enormously. So yeah, and you know, if I think back on all of my conversations with Kyle and Tushar and the team over there, like the one thing that always struck me is their optimism for the space is always like, how can I structure this trade to be more convex, right? Like I want to capture more upside. And it was never about hedging. It was never about downside risk. And maybe that's just the nature of like my dialogue with them as an options guy. But it was always how can I structure this to get more convexity? And then over time, right, it became like, well, the fund is this big. I need it to make an impact on the fund returns. Like, what can I do to have it be more meaningful? And maybe that's to your point too, Santi, just like at some point, you know, you get to a certain scale. You've been so successful that you kind of have to sit back and think like, you know, if I want to make a big impact or hit a big trade, how can I do that more effectively in maybe a different seat? So, yeah.
I was looking at the just on that point on fund size. I was looking at I think it was Sequoia India vintages, and the first fund was like 68 million. Their DPI is like 8x or 9. Every other vintage out, like the AUM, and I think it's 5 or 6 different funds after that, like grew an order of magnitude, so it's 600 million or so. And of course, like timing, of course, some of these funds are still harvesting or will begin to harvest, but there's a degradation in returns. And a fund like Benchmark has stayed consistent in 300 million. And I don't know if that's the right number for crypto. I don't know what the right number is. But I certainly just, it's the laws of physics. The larger you are, it naturally comes with a return degradation. And especially in crypto, where I think the opportunity set may not be expanding as much as we probably thought over the last 7-8 years. Rob might disagree with that, but
I do disagree with that, because it's more specific, right? The opportunities are narrower but larger.
Fair enough. Like I would, yeah, I think you could say maybe some of these funds, their competence is not in that specific vertical, and so therefore, if you were managing 500 million for a generalist fund that invests in L1s only, or historically that, and you miss stablecoins, then, or you don't have fintech knowledge, then what's your edge? You're just going to underperform.
I appreciate you continuing to make this an advertisement for Dragonfly. So.
God, that's just a layup, not just because you're a lead investor. God, Rob, every opportunity is everything just comes. There's Josh, we should play a game in this pod of like, at what point does a conversation come back to inversion or come back to Dragonfly? And like, I don't understand why people keep listening to the pods, man. Truly.
I call you out. I mean, this whole podcast is an ad at this point.
Yeah, I hear it.
Josh, so you didn't actually answer the final question, and maybe we need a little bit of optimism here, which is like, why have you stuck in the space? What keeps you excited, getting up every day? Yeah, I know you don't have to go to work.
He's like, well,
why do you still do it?
I had a draft tweet that was going to go out, but Kyle beat me to the punch. I'm kidding, Josh.
He's like, I'm literally quitting tomorrow. This is my final thing I'm doing.
The joke that I always make is like, I'm unfit to do literally anything else. Like I've lost all of my marketable skills being in crypto for this long. But I mean, the real answer is like, I don't know if you guys know, but I actually did spend some time like outside of crypto, post Circle. I actually went back to work at a bank to do like some systematic equities trading. And I just realized like that market is so slow and ossified, and market structure doesn't really change that much year to year. Sure, there's like exciting things that happen and pop up once in a while, but it's like once in a decade, right? Changes. And in crypto, the industry that we're in, it's like the way that we make money as a firm actually today is different than it was 6 months ago, and that was different than 12 months ago. It's always a new thing. It's always a new category. And I like being in seats where I'm always operating at the frontier of what's happening. And that doesn't mean we don't build like a durable business by backfilling, things that are becoming commoditized with automation. But like what I want to do is actually just service, the very frontier of what's happening in crypto. And that's also why I'm optimistic in the face of, banks trying to build crypto practices and stuff like that. I just think that there's value in having like a nimble dealing desk trading firm that you can interact with, people that you trust, that can give you access to things that no one else can. So yeah, that's my advertisement for FalconX. So
love it.
Damn.
That's in the advertisement for the space.
Yeah.
A lot of things to still be excited about.
Yeah.
Like we talked about earlier.
Not to squash the optimism, but look, I've been playing around with Claude, and I whipped up this idea that I've had for a while. Rob's like, Jesus Christ, why are you not spending all your time with inversion? I am, but I did this little experiment that will be my content of the week. And I want Josh, since you're the guest here, I want you to run through this exercise. It will take 45 seconds, but I think it forced the discussion. Rob, you and I played this game sometimes during this podcast, so I figured it would be something along the Solana Western Union trade that I'm so much up here. So Josh, you're going to answer a series of questions here.
Okay.
And you're going to tell me which one you pick. It's
All
like a Tinder, but like, what would you rather own, Apple or Tesla?
This is what you're spending your time on. Is it Tinder for equities? I got it.
No, it's privates too. Crypto too.
Oh, private stuff. Okay. All right.
I like
Go-
this
go-
a lot. I think just Tesla for the sheer addressable market there.
100% correct. Your consensus. Visa or JP Morgan.
JP Morgan.
Okay.
Wait. The majority is coming from where? Like, where is this pulling from?
So I trained it, so it's responses. I think we've gotten like 10,000 responses now. So it's
Got it. So this is based on this is like hot or not, basically.
exactly. Yeah.
Yeah. Okay.
It's called FDV, of course, fully diluted value, or a play on deep
I
fucking
love
value.
this. By the way, I play this on the desk all the time.
There you go. So
With
Rob, if inversion doesn't work out, we'll just monetize this.
Yeah.
Josh, can I come and sit on the FalconX desk one day? And
A lot of people have asked for like guest passes, just sit on the desk. I think we should do it. We should open up like
Well, also as a FalconX shareholder now, I feel like
Yeah.
Rob, okay, enough.
Rob, you can always sit behind me on a stool and grab me coffee whenever you want.
Back to the game. Don't deflect, Josh. Stripe at 91 billion or Dogecoin at 16. That's easy.
Stripe for sure.
Okay, Stripe. Good. Contrarian. XAI or Chainlink?
Ooh.
Very different valuations.
Wait. Can I just say something? We just brush over the fact that 75% of people that you have given this to said they'd rather own Dogecoin than Stripe.
Ski's crypto native, I guess.
That is insanity. Okay.
I know.
Right?
So on this one, I mean, I think I would go XAI.
Okay, yeah. Now, especially merged with SpaceX.
Yeah, exactly.
Bitcoin or gold, the ultimate.
Bitcoin. Yeah.
All right.
This is definitely crypto specific because the last one you just did too with XAI and Chainlink, it was very heavy Chainlink.
Yeah.
So you got too many crypto people here. So
yeah. Alphabet or Microsoft?
Alphabet. Yeah.
All right. It's down 6% today, I think. Silver or Visa?
Oof. Visa.
50-50. Well.
Nvidia or AMD?
Ooh. I'm not qualified to answer. I'm just going to say Nvidia.
Okay.
All right, Santi, I feel like this is the type of podcasting we should not be doing. So
No, I know. Well, none of this is financial advice, but we'll run through this quick. Is it 10 more? Berkshire or gold? We'll go first.
Berkshire.
Okay.
Yeah.
Ethereum or gold? Easy.
Ooh. Yeah, Ethereum, of course.
Oh. Jeez. I thought you were gonna say gold. I meant to click there. Walmart or Amazon? Got 8 more to go.
Amazon.
Okay, good. MasterCard or Visa?
This is very easy.
Visa.
Rob, you can chime in here. I feel like you're feeling neglected.
Yeah, Rob, help me out.
You can help out. Help a friend.
I mean, Visa's very clearly innovating much more quickly than MasterCard is.
Netflix or Canva?
Ooh. I'm gonna say Netflix.
Okay. Rob,
yeah, I mean, SaaS is
Avalanche or XRP? Rob, you're gonna have to recuse yourself from that.
I will.
I mean, this is hard. I'm gonna say XRP.
Yeah, for the memes, man. MasterCard or JP?
Oh, 51% Avalanche. Nice.
Yeah.
JP.
Okay. Plaid or TikTok?
Ooh. TikTok.
4 more to go. TikTok. Okay.
Back to software here.
Silver or Berkshire?
Berkshire.
Well, you're still a Berkshire stan now that even these guys as old as they are.
A piece of America. Do you believe in America or no?
Okay. All right, I do.
Meta or Databricks?
It's a good one. Probably Meta.
Bitcoin or Berkshire? One is rat poison, the other one's not.
Wow. Bitcoin.
Okay. Last one, Stripe or Silver? Easy.
Stripe.
Okay. You're a growth chaser.
Yeah.
60, right. Is that true?
Yeah, of course. Aren't we all?
You matched 65% of the consensus view. Only 2 out of 20 you're against the crowd. Your risk appetite is low.
Yeah, listen, I will tell you, I'm in a few group chats with Josh. Having seen how Josh invests and trades, I mean, we're all in crypto, and so like we're all obviously chasing some sort of growth. But there's probably nobody who talks about downside risk in any of my crypto group chats more than Josh. And he does a really good job of like, he's like, oh, I'm up 30%. Let me get out of this thing. Like, there's nobody else in crypto who like is like, oh yeah, I'm up 30%. Let me get out of this thing.
Maybe the ability to be a growth chaser, you have to think about downside. If you truly understand downside, you can really chase growth and just, go at it.
Listen, you're not as successful as Josh without being able to, think about, both upside and downside.
I think Santi's a lot more successful than me, but yeah, no, I would say like this last year has been humbling for me because I think me and like other people who've been in crypto for quite some time, because the convexity is just completely sucked out of this asset class. And so it's like, you do have to take profits aggressively. You can't just like sit in assets and wait for a 10x. It's like, you'll bleed, because you'll bleed like 90% while you're waiting. So maybe you get your 10x, but then you're back to flat. So it's brutal, this market. I have to rewire myself.
Truly.
All right, should we do content of the week?
Content of the week. I did mine. So, Josh,
that was your content.
What?
That's my content, man.
I'll that was your content.
I'll send it to you so you can play in the spare time and just share it with your non-crypto friends so we can have that.
I love that. I think you can add to that. You could have it like predict my personality type and all that kind of stuff from there.
I'm gonna use it for hirings. Like I think it was like the tiny guy who created like this like shrink of sorts with like Claude, which I don't know how true that is.
Yeah.
By the way, do you guys do? I don't know if you can disclose or not, but like when you hire traders, how much of it is a behavioral interview? Because like you need to like weather your emotions when you're like you need to have a strong emotional foundation.
Yeah. It's not like we don't have an administer a test or anything, but I spend most of my time trying to gauge people's response function to different types of stresses.
Fair enough.
Yeah.
Okay. What's the content?
One thing it's because of all this quantum scare stuff in crypto. I've been rereading some of David Deutsch's books, like Fabric of Reality. They're very geared towards lay people, obviously, but really talks about like the metaphysical implications of quantum computing, like the multiverse hypothesis and stuff like that. And also talks about, like what are the applicability, how can you apply quantum computing to solve hard problems? And I think we are so focused on Bitcoin. We're like, oh, this is going to break everything, but it really only can solve like a subset of things, right? That have this sort of like exponential embedded into it. So, and the sort of like signature generation stuff in crypto obviously falls into that category, but a lot of things don't. So yeah, it's kind of interesting. I studied computer science in school, but I haven't put it to real use in quite some time. So it's interesting.
All right, Josh, you don't know this because I don't think you've listened to a ton of our podcasts, which you're going to change now. But I always end up having the the fiction or like the fun things, and so. But this week it's nonfiction because it's just Olympics, Winter Olympics. Okay, Winter Olympics started yesterday. We got some curling today, some mixed doubles. We've got some ice hockey.
You strike me as a curling guy, Rob. You strike me as a guy that sits down like with a Diet Coke looking at curling all day.
Listen, I will tell you, I love to have like stuff like that. Listen,
that's a market. That's where the state of the markets. All you need to know if you didn't listen to anything
Santi,
is that Rob is sitting there with Diet Coke watching curling.
Here's what you should know about me. I like to compete. And if we're competing at flipping a cup or if we're like throwing a stone on some ice or we're competing at like trading or competing at investing, I want to win. And so I like the best people in the world doing whatever it is they're doing, trying to be the best in the world at things. So I just like excellence. So sorry.
No, listen. That's why I picked.
I hope that is the start to this. I hope when Will cuts this, it's I like excellence. It's just the start, and that's the front. So
look, I get it, man. Curling is one of those. There is content. There's a documentary called The Strife. that in Kitzbühel in Austria, the downhill skiing, the amount of force these guys need to have, and I've seen them train in my gym. Like there's a couple of Olympians there. It is unreal the amount of power they need to have. It's a great documentary. The Strife is like that famous downhill in Austria. People have died in this corner. It's a very well done documentary. It talks about obviously the history of the Olympics, the sport. Yeah, it's pretty good. It's happening in Italy, Milan, Cortina and Pesa, right?
Yeah, that's right.
Okay, that's good. We'll have to tune into that. I'll put curling in the background while I see the
Great.
markets bleed. Josh, thanks, man. Thanks for joining. This is really good discussion. I think it's very timely, so we should have you on.
Yeah, it's always a pleasure to chat with you, gentlemen. Thanks for having me.
Thanks, guys.